every trader's focus is to get low spreads and finding a perfect strategy. They also focus on proper entries and exits. However, before any decision is made, look for a reliable broker. We all want to have good spreads and commissions that allow us to get into the blue faster. At HankoTrade, having spreads as low as 0.0 pips with leverage available up to 500 times is just one click away. You may also choose from 3 different account types, with a minimum deposit as low as $10. Built by traders for traders. Trade and control with our recommended broker, HankoTrade.
Welcome, snipers, to another edition of a trade recap that we took in our live session. So my name is Ronnie, my partner is Dave. Welcome to SST, guys. We appreciate all the support and love that you're giving, so we'd love to give back on these educational videos. Please, guys, don't forget, make sure to like, subscribe, leave us a comment, let us know what you think about these trade recaps. If you got any questions, we'd love to answer those. So let's get into this. So the trade recap that we took on July 20th in our New York session, in the private session, what we took was a buy setup on NASDAQ 100. I'm going to break it down to leading into Wall Street open at 9:30 a.m. Eastern, and to show you the institutional move, how it continued in the bullish momentum on anticipation of Netflix earnings. So what we're going to do is we're going to break it down from the hourly. Okay, so what we're going to look at is just some hourly structure, how the hourly move was from July 19, from the previous day. We are in a nice steady uptrend on the hourly. Was very, very bullish July 19, and we see that we start to make some hourly resistance. So we have to locate this area. We can either go to the bodies or the wicks. That's all personal preference. If you want the full range or the critical volume, the open close of the bodies. Now we can I agree that this is an hourly resistance. So above resistance, multiple touches, there is a small form of supply forming up there. Now we retrace back, so we pull back down to here. So this was London market, July 23 a.m. Eastern opening up. So this was basically the London market drop, and then 4 a.m., 5 a.m., a nice little pullback in the market. Okay, so let's locate a nice area of structure right here at 12,250. It's a nice psychological number. So we can see a pullback here, come up, and then now we start to make a lower high. So we can see the market continuing to push down, where we create this hourly resistance right over here. Then 6 a.m. Eastern, we have this bearish candle coming through, closing below, a retest drop, and now we're leading into 8 a.m. So we can see that we're making nice hourly support right here at 12,200 level. There's nice wicks getting rejected here. So 8 a.m. we got rejected, 6 a.m. We got rejected. Back over here in the past, July 19, we got rejected. So there is good demand support on the hourly that we can start to see forming from right now. Okay, and we also can see that there is some supply forming above us right now. So right now the volatility, the volume is ranging leading into New York Wall Street open, where there is a little bit of accumulation going through the supply and demand, but it is still a nice little range to trade. Now, when we look to the left of the chart for some confluence, let's take a look at our areas, okay? So we can see that this area to the left is still holding. Area of supply, now where are we coming to in the market? So when we look over here, see what we're trading in this range over here. So if we extend this all the way to over here, we're starting to locate where the imbalance in the market is. Look over here on June 9, okay? You see the big, this is a big rally, big bearish dump in the market coming down, and then we catch a little relief right here. This is a little dead cat bounce where the market pauses and then it continues to break and go down. So this is a little bearish continuation pattern. And then when we look to the left of the chart, if we bring that demand that we're creating, you can see from the left of the chart, it used to be a supply area, and we'll bring it right back to over here. So we can see that this used to be previous supply. When it came back up, pushed down, it held right here, pushed down. So now we've finally got the volume, hourly volume, closing above. So now we're trading in this channel from the left. But this was a critical area, because looking above us, if we are to make a nice bullish move and break out of here, 12,330 area, look how much imbalance we have to fill to the left of the chart over here. So we can see our hourly candles coming over here. This is what we predicted. We predicted 12,420. Okay, the snipers liked 12,420. So we predicted this level would fill. Look at this liquidity fill right here. We could get a nice institutional move from Wall Street, breaking right through here and continue to pump up and come up to these levels. Okay, so let's take a look in how this developed. Okay, so what we're going to do is I'm going to trade now. I'm going to break this down, hourly candles, 8 a.m. I'm going to lead into the 5 minutes, because what we do is when we start to scalp our charts, we start to do a top-down analysis from the daily for our hourly, and then we get right into the 5 minute session. And right here we can see the 5 minute candlesticks, how they're moving. Okay, so we can see that it makes higher highs, higher lows, back up to this big supply area. Then there's a double top, we break, lower lows, lower highs, continuing to push down. We have a pullback in the market followed by nice rejections, continuing to push down. We revisit this area, buyers bring it back up, they prop it up, and then we push back down. Okay, so now we can start to see how we were trading all the way from back over here at midnight. Okay, so if we draw a trend line from midnight coming all the way down here, this is London. Okay, this is London. So you can see that we can start to see London's high. Okay, and if we extend this trend line, we can bring it all the way. So we are still bearish, but we're starting to build something off the bottom at 8 a.m. Okay, it is trending up over here, making higher lows. So maybe we could get a nice little trend break and continue. So let's locate also, where is London market high? Okay, so let's place a red line at London market high right up here. So that's London's high right here, 12,310 area. Okay, so we can see over here, we tried to pierce this candle right here at 3:20 a.m. Eastern. It tried, but it was followed by a sharp rejection and a push down. So we've got London's high, and now we're leading into Wall Street. So what do we have on these 5 minute candles now? Okay, so looking at previous structure over here, we were pushing up like this. This was an ascending triangle coming up. We were going to look for possible squeeze to break out of there. It failed. So it broke down, continued to push down. So that was a failed attempt to break out of this ascending triangle. And we pushed down and it continued to come down. But now again, we're forming now a nice bottom over here. So we can see volume came down, back up, but we cannot break this hourly area. Another push down, but the 5 minute candles are creating nice little higher low support. Okay, so let's now, this is 8 a.m. Now what we're going to do is we're going to lead into what we were looking for. So we were looking for possibly to come revisit this area, and let's just play it over here. Okay, so we start to see that it got rejected leading into 8:30. Start to see that it got rejected up here. No buys or anything like that. We came back down. Now we're coming back down to this big level down here. So last time we came down here, we had nice rejections to the upside. So that's what we're looking for. We're looking for buyers to hold this area so that we can penetrate up to the upside over here. Okay, so we started to pick up on this pattern over here, 9 a.m. Okay, so we were targeting some buys above, if we could get above this area and close above. Okay, we want to get 5-minute volume above this hourly level, and then maybe we could break out to the next hourly high above there. Okay, so the markets get very volatile. Okay, so we didn't break, no volume closed above there, so we pushed back down, broke the original trend. Now it's 9:10. Okay, 9:15, bullish candle comes all the way back up here. Okay, so could get impulse break. We're looking for liquidity to close as well up there. So there it is. There's the first candle body that closed 9:20. Can take an initial order on our next candle with confirmation. So it opened, it came down, okay, for a retest. That's what we're looking for. We're looking to retest this area with volume that closes above. So this is an entry right here. So enter, stop loss. You can place now stop loss, maybe 50% of this red body right here, and you could be protected right there. If you want to have more of an open stop loss below there, okay, you got to always establish how much you're willing to risk for your reward, but where you place your stop loss is also strategic. So you want to place it in an area too that you're not too tight, where a market maker can see your stop loss and then maybe come down for that last bit of liquidity, tap you out of your trade, liquidate your order, and then you're going to start to watch the market rotate in the intended direction. So you do have to understand stop loss placement, just like when you're learning where to take your entries and profit targets as well. Stop loss is very, very important for your risk management. Okay, so this was a very volatile time in the market. Okay, so this is now 9:30, and I just want to show you what happens here. Okay, so when I said if you had like a conservative stop loss, like right here, 50% of that body or below here, look at what happens now in Wall Street. Wall Street is very volatile. It's a liquidity grab, okay, for maybe the first 15 minutes from 9:30 to 9:45, where institutional candles start to really range and they grab a lot of liquidity out of the market. So if you don't feel comfortable trading Wall Street open, it's okay. Don't trade it. Wait for first 15 minutes to develop. Wait for 10 a.m. Start to understand what is the institutional move. What are these guys doing? What are they orchestrating? And then you can start to follow the liquidity and follow the volume with them, okay? But some traders like to trade market open because it's fast, can get some quick pips. But if you lack the knowledge of what's going on, it could really affect your account and you could do some negative things to your account. So right here, look at the psychology, okay? So this is a perfect break candle, volume close, and a retest. So most traders are taking the buy. And where do most traders place their stop loss? Right here, right there, or over here, okay? So it's easy for now the market to open up and they come down, and this was that big red bearish candle where they fake the market down. They come down to trigger all of the pending orders. There could be stop losses triggered, okay? So for all these buyers that are in trades, they place their stop loss there to protect them, which is understandable. But when you understand how the market makers work, they can see pending orders in the market. They can come down, trigger, so they take you out of your trade, they liquidate you, they're taking your money. And now there's also maybe some sell limits in the market because they see a big red candle and want to continue to go down. Those get triggered. Buy limits, everything down here that's pending gets triggered. And their move was they came down to trigger all of everything below us, take the liquidity, and look at the candle, how it went up to a high and closed right here. Next candle, 9:35, a very bullish ignited candle. This is what you want to read, okay? So now if you were patient and you waited for the first 5 minutes of Wall Street open and you never went in and you bit early, then you would have seen that it was a big bearish candle come down, liquidate all of the pending orders down there, come back up, close as a bullish pin bar, and look at where we're closing, above this key level to the left, this 5-minute structure that used to be support, now acting as resistance. We get volume close above, then we get an ignited green bar. These are the candles that we like to locate. These are sniper entries. You could locate this. This is just a continuation candle right into demand, and with no pullback, no wick to the bottom, and it's created with lots of demand. You get that nice break. And where do we move up to? We move to intended targets up here, okay? So first target was kind of this hourly area. So now when you're looking to the left of the chart, we could continue to fill imbalance. What was this imbalance? This was London high, London market high. Remember, we located that by doing some top-down analysis, back testing, looking previous historical data. You see that that was London market high. So where are we closing now? We need to close with volume above the hourly 12,293, 300 area, and maybe we can continue momentum. Maybe we get a small pullback in the market or a little consolidation leading into like 10 a.m. So let's see how we were still watching this move. Okay, so this is what happened. The move was very bullish. It broke through here and it came right to London market high. Okay, so you cannot get greedy, guys. You cannot get greedy. It came to a major market high and there was supply in London, so the supply was added over here. So it was a nice, very bullish move right out of the gate. Okay, from the break of 12,250, this thing actually extended for about 70 pips plus. Okay, so I'm sure that you can bank 10, 20, 30, 40, 50 pips with a move like this. But if you're getting greedy up here and you're not respecting technicals to what's going on over here on the left, then this might surprise you, and this doesn't surprise us. This is now it came up to supply, and what do? They push it back down and they bring it back down to our original breakout level. Now we're looking for maybe some support to hold here. Okay, this was the major break, but what could they also do? They could come back down to try and grab maybe some last bit of liquidity, but we're still holding previous trend. Let's see if it can rotate right back up. Okay, so we come down and it taps and we continue to move bullish. Okay, so you can see that it retraced all the way back down to the Wall Street breakout, respected, held. I don't see any volume closing below here, but I see a red candle come down with an aggressive rejection wick at 10 a.m. And now we're pushing up where we could possibly break out of our London high and our overall major higher time frame above here, and we could continue to fill lots of imbalance to the left of the chart when we did our hourly analysis, where the market could penetrate to 12,420. Okay, so I want to show this. This was a 3-bar play that we took live as well. Okay, so we identified 1010, a bullish candle come up here, looking to break. This is London high, okay, to the left of the chart, London high. We're looking for volume to close above, but when we saw this red candle come back down, test the hourly level and hold and close right here, about 50% of the green candle, bullish candle. That's what we like to see. And this is a 3-bar play. We had this boxed in and we took the extended move coming out of here. So we see the move of this candle opening 1020, open up red, small pullback, and right here. Most of us bought the break of this candle. This is a traditional 3-bar candlestick play. It's got your inside pause with your continued motion going through here. We are creating higher highs and higher lows in the market. We're seeing major liquidity grab at Wall Street open. We see Wall Street get respected. So it's natural that we're going to continue to move with the institution. So we continued to move. Now we have a new high coming up to major supply area on the higher time frame, but we have a lot of momentum. So this is where continued move. And what was our anticipated level on the hourly? 12,420 was our expected move for the day. And let's see it play out. Beautiful. Okay, so we continued 1025, continued higher highs, higher lows, small pullback, continued to push. Our target was 420, and this thing continued to push up a little farther. So, and then we retraced back down a little bit. But this is a Wall Street breakdown of how we traded this. We also traded NASDAQ US 30 DAX. We also did a little bit of gold and EU on this day. This was a really nice move, but you got to understand the volatility that happens with Wall Street. And then later on, if you can catch the institutional move, then you're going to continue to trade with the trend, continue to trade with the higher highs, the higher lows, maybe buy the pullbacks, or continue to hold your trade by understanding technical analysis. Guys, thank you guys so much. I know this video went longer than we normally do, but there was a lot to go over. I hope you appreciate this analysis. We did this live with our snipers in our private Zoom group in the Discord community. Thank you guys for listening. I appreciate all your support. Dave appreciates your support. SST appreciates all your support. Thank you guys. Hopefully you guys are learning and earning, and you guys are compounding your accounts and you're growing. And yeah, so any comments, leave us a comment below. Make sure to check out our recommended suggested videos as well. And we'll see you guys again. Thank you guys very much. SST. Thank you.